Right, hello everybody. We're here today with Craig Poulter from Venture Morgatge Management.
Hello Matthew, you right?
Yeah, not too bad. We're going to be looking at Craig's kind of sort of goals, what he's going to be looking at in the future and how he's going to get there and maybe any sort of struggles he's had along the way. But before we get going with that, tell us a little bit about your business in a kind of sort of B&I elevator style pitch, but you can have a bit longer than 60 seconds.
Thank you very much. So Venture Morgatge Management is a independent mortgage brokerage. So our goal is just to help people make sure they're not giving the banks too much money. Over the last few years, everyone's noticed quite an increase in interest rates. So our job is to try and get people the best deal that we can possibly find them on the market.
Yeah, and I hear like whole of market a lot. What does that mean?
So we haven't got any restrictions. So some brokerages, more kind of corporate ones, might use a panel of lenders. So they might use like 15 or 20, but we've got access to about 105 different lenders.
Yeah, and you do everything from your kind of like standard mortgages for say like domestic houses, people just living in one house to more complicated stuff.
Yeah, exactly. So our bread and butter is your general kind of residential mortgages. So people buying for their own residence. We do more complicated stuff like buy-to-lets and commercial properties, some bridging finance too.
Yeah, and you're based in the southeast, just down in Seaford. But
yeah, that's right. Yeah.
What's the area you cover?
Nationwide.
Nationwide.
Yeah, we can cover anywhere.
Yeah. And in terms of kind of length of time you've been doing this, because you did, obviously I know Craig from a previous life as well, because you were at a well-known estate agency doing this stuff before, so tell us a bit about your journey.
So I got into the property market when I was about 19, when I left college. I worked, as we say, in a corporate estate agency for about a year and a half, but that was 2008, 2009 when the market dropped. I just bought my first property, and
The market more than dropped, I think.
Yeah, crash, imploded.
Something about their backsides.
Yes. So I had to go and find a job that had a bigger basic salary. So I went to work for Barclays and did that for about a year. That really wasn't my bag. It was very constrictive of what you could do. And it felt very much like Big Brother over the top of you all the time. So I actually got asked to go back to the corporate estate agency as a mortgage broker, and that was now 16 years ago.
Yeah.
And it feels like it was about 5 years ago.
Yeah.
But yeah, in reality, this is my 16th year being a mortgage advisor.
Yeah.
I get to keep people very excited about the world of mortgages for such a long period of time.
So you went out on your own 16 years ago, pretty much?
No, I went back to work for the corporate estate agency as a mortgage broker. They asked me to go back as a broker. And from there, I've then kind of, I wouldn't say moved around a lot. I've only had kind of 3 different places as a mortgage broker.
Yeah.
But 8 years ago, I started up Venture, just as a kind of a one-man band. And I then took on an apprentice. And we've had a few brokers kind of come and go since, but now we've got 4 different brokers. Yeah, and it's going really well.
Yeah, that's good stuff. And I think in terms of like your growth since I've known you, obviously you were like a one-man band to start with, haven't you? And that apprentice still works for you, doesn't he?
Yeah, he's been with us, this is his 8th year.
Yeah, that's pretty impressive.
Yeah, he's a good lad, Connor, he knows his stuff.
Yeah, because the structure's slightly different in like from a traditional like pay way, they're quite sort of commission based, like kind of look after themselves.
Yeah, so in our world it tends to be that brokers are self-employed.
Yeah.
That is simply just to mitigate risk.
Right. Okay.
Because if you're having to pay a salary to mortgage brokers, the overheads become really quite significant.
Yeah. So I suppose on that note, and we had a bit of a pre-chat before we went on air. Essentially, you talked about kind of your journey and like because you're a bit like myself. You like a good risk and kind of I don't know, stick it all on Black 22 or something because it might come in. Maybe not that extreme, but as the years have gone over, you kind of mellowed a little bit, or maybe had to kind of like look at the bigger picture or something, haven't you?
Yeah. So what we were saying earlier really is that before having kids, you seem quite indestructible and you're fearless and you think I'm going in this direction and to hell with the consequences.
Yeah.
But as you kind of get older and you start mellowing and have children, you start kind of worrying a bit more. Well, I want to grow, but actually I've got to make sure the kids have got food on the table before I can go and invest in the next big thing. It's a very different feeling once you have kids.
Yeah. Do you think there's like a point in your time where you felt like that? Like you were kind of invincible and then you suddenly woke up one day, or is it just like a gradual thing, or an event that happened?
I think it's a gradual thing. I think after having my first, and you feel that just unbelievable love you have for your kids, and you don't want to put their future at risk. But it's that balance, isn't it? Because you need to have some risk to give them the best future, but you want to make sure that they're provided for, and that is your first port of call. Make sure the kids are provided for, and everything else comes after that.
Yeah. And what sort of steps do you think you've made to like kind of ring fence that? I suppose like if you can kind of go like that, if you kind of sat down and said like, that's the level of achievement that I need to maintain my family, and then everything else I can be risky with outside of that.
I suppose I'm quite lucky because I've been a broker for so long. I've got a client bank.
Yeah.
So to some extent, I mean, I did a test last month, and I was saying, okay, so what does next year look like? What clients have I got with rates coming up next year? Without kind of going into too much depth, you've got a period of time 5 years ago where interest rates were super low. So everyone was taking 5-year fix because that was the right thing to do at the time.
Yeah.
So now those 5-year deals are coming to an end. And actually now 5-year deals are a lot less popular because it's felt the rates are going to come down over the next couple of years.
Yeah.
So it's a very much a change where it's been a quieter period and it picks up. I noticed the first half of last year was absolutely brilliant.
Yeah.
Sorry, the first half of this year was absolutely brilliant. The second half's been much slower. But then you look at say, well, what does next year look like? And you can see straight away that you've got so many deals that are coming up for renewal that you can say, well, actually, I know that I'm going to earn a baseline of this much next year, and then new business on top of that. Yeah. So it's kind of looking back, but also looking forward and going, well, what have I got coming up? And to some extent, you can give an estimate of, I know what we're going to earn to some extent next year.
Because you've also got your own portfolio of buy-to-let properties essentially as well. So presumably that is, I know interest rates would have impacted that portfolio, but presumably that is part of your baseline as well, factored in?
Yeah, definitely. Yeah. We do have some rates coming up on those next year. Yeah. And when you're going from rates at 1.5% to 4.5%, 5%, it's quite a bit of pill to swallow. But we during COVID, rates were so low, and to say it was a license to print money is unfair. But it was so much more rewarding than it is now. And will it get better? It'll get slightly better, but we're not going to see the days. If people are expecting the 1% rates back anytime soon, it's not going to happen.
Presumably you've done the calculation of looking at how much the rents have gone up as well, because we're obviously in the same similar boat in that sense that the mortgage payments are a lot higher than they traditionally were, but the rents are also a lot higher than they perhaps were before as well. So the percentage gap isn't actually as big as you think it might be if you've kept on top of the rents. Yeah,
I can see what you mean. There is a bit of an ethical challenge when we've had such a cost of living crisis where rates going up, rents have to go up too, but they are not correlated. Yeah. The rates have gone up exponentially higher than what the rents are.
Because your portfolio is primarily outside of the Brighton and Hove catchment area, isn't it? Yeah. So obviously that for us that's been key, not buying outside of that area, because obviously they'll pay slightly more going forward, like from a council's point of view, from housing benefit. So we're fortunate in that position. But definitely the stuff that we've held outside of their catchment area is not as profitable, I would say.
One thing that we did quite a number of years ago now that was really beneficial was title splitting. Yeah. That was a real game changer for us. We bought a property that was a 2-bedroom house, but it had a decent sized loft and it actually had a basement. Yeah. So we made that into 2 maisonettes. It cost quite a significant amount to do the work, but then you're getting 2 amounts of rent for effectively 1 property. Split the title, then you've got 2 mortgageable assets. Yeah. So that was a real game changer.
Yeah, those sort of stuff is like, in my opinion, like it's like the next league up from your like kind of, you've got your like basic buy-to-let, like they've just maybe got some redundancy payment or whatever, and they like kind of just think that mum and dad always did buy-to-let, so I should do that as well. Yeah. And then the next size up is the person that like actually buy, refurbish, rent, refinance, that BRR type model, and then you move to that kind of more developer type model, I think, which is like you're splitting up properties and maybe commercial back to resi or something like that.
Yeah, the last couple of years for the kind of, I heard a terminology the other day that did make me chuckle, a dinner party landlords. where they do it because it sounds good.
Yes.
There's a lot less of those in the market than there used to be, simply due to rates.
Yeah.
And we look at the taxation of buy-to-let property and how that's changed over the last few years. If anyone wants to look up George Osborne, that would be a good place to start to thank for your taxation issues with buy-to-lets.
Yeah.
There's much fewer when it comes to your casual landlords.
Yeah.
The margins just haven't been there.
Yeah.
So you do have to start thinking a bit outside the box. What can I do that's going to make a better return? Can I split a title? Am I getting it under market value for a particular reason? And that's where it's a bit of a game changer.
Yeah, and I suppose that kind of want to like look around stuff is matches one of your comments about you're kind of going into other industries now as well.
Yeah, so it's just widening my net really. So next year I'll be moving into doing pensions and investments.
Yeah.
I think it's kind of a natural progression really. I've been doing it now, as I mentioned, it's kind of 16 years.
Yeah.
So it's just something that's a bit different.
When you say investments, how's that distinguished between pensions? Because I think most people, your average person doesn't understand pensions. Like they just hand over the money at the end of the journey. You get some sort of return, whether you've invested in bonds, stocks. They probably know all those things.
Yeah.
But how's that distinguished? Like when you say pensions and investments, are you investing for people in general, not like outside of a pension, or?
Well, where pensions become so useful is they're extremely tax efficient. But the issue you have is you can't touch it until a set time. Well, that's currently 55, but changing in the very near future. So you might have an investment where you've got some money that you go, actually, I'm going to tie some money up for a couple of years, and I want to see the return, a real return, in a few years' time. With a pension, you can't do that. You have that money set away and you can't touch it. So a pension is very much for once I finish work, what am I going to do with that money then? Whereas an investment might be a much shorter timescale. So you're going, actually, I need this in 5 years, or I need it in 10 years, and I'm looking for a return over that period. Pensions are fantastic when it comes to tax efficiency, but when it comes to liquidity and availability, they're really not that useful now.
So I suppose you're kind of targeting that market that maybe don't understand the usage of like things like their ISAs and stuff like that.
Yeah,
in terms of investing that into ETFs or baskets of funds or things like that sort of stuff.
Yeah, absolutely.
Yeah, fine. I get that. Yeah, because there's two distinct things between a pension and just a general investment, and people should always seek to max out their ISA because you can get to it straight away if you need it.
Yeah, it offers great liquidity.
Yeah. I mean, well, that's what I that's my sort of thing really. I stick it all in the ISA, not a lot in pensions, and then every now and then draw down when I have a little party day.
But then your pension then becomes your property portfolio.
Yeah.
So unfortunately, a really not particularly tax efficient model.
No.
But the growth tends to be fantastic.
Yeah, or not tax efficient. If you own it in a company name, you could put some of the company profits from your buy-to-let into a pension if you wanted to sort of filter it out that way if you wanted to. Obviously, we're still in a growth mode effectively, so the profits still remain in the business because I think I can outgrow the pension return at the moment. That's like my opinion on it. Obviously, everyone's going to be different, and there is, for your kind of average person, I think pensions are a much better option because you say your dinner landlords, they don't really know what they're doing. Not in a big way anyway.
And it's the cost of getting into it, the stamp duty, the taxation. If it's something you're doing just lightly, it's probably not going to work.
Well, Rachel Thieves managed to get another £3,000 out of us on that one that we're doing. That's completing in a few weeks' time. So that's the way it goes. So we're kind of moving more towards commercial now. So because stamp duty is so high. So So I think that it's really good that you kind of looking to expand into other areas because I do think that vertical integration, which I've talked about in a couple of other videos that I've done, if anyone wants to go and check those out, is really key to kind of weathering the storm of like financial stuff. So is there any other sort of things that you're kind of thinking about bolstering? I mean, it's good that you're doing that. So a lot of business owners won't. It'll just come and hit them in the face probably next year or the year after.
I think diversification, if you've got more strings to your bow, then you've got more things that you can market, you've got more potential clients that you can bring in. So although some might say, well, it's a risk to go into something you don't know, I'll still be doing what I did know, but now I've got the option actually of getting new clients and going back to my client bank, the ones that haven't had pension information, the ones that haven't had investment information. Can we help those people as well? Yeah. So I think diversification, when you look at it like on a buy-to-let model, if you just have one property and the tenant stop paying, you've got no rent. If you've got 4 properties and one stops paying, you still have the other 3 rents coming in that can help out the 4th. Yeah. So I see that as another income stream where actually, if things are a little bit quiet in the mortgage world, then the pension investment world will offer some help in that area as well. So I think diversification is key.
Yeah, definitely. And picking on those low-hanging fruits, as I like to term the phrase, just because they're your existing clients. Yeah. They're really easy to go and kind of target and contact and upsell to, essentially.
Yeah, I know we have good relationships with our customers. We do the best job we can, and I think that's reflected if you were to have a look at us online and the reviews that we get. So, like you say, the low-hanging fruit of the existing customers, that's going to be the first port of call. Go and speak to them and see if we can help with pensions, investments, because we know we do a good job for them.
Okay. So I just want to go on to kind of your 1 to 10 year plans, I suppose it is. So in a year's time, what you're hoping now is to integrate further into the financial advice and offering, kind of one-stop shop for finance-related stuff. 3 to 5 years from now, look to increase the number of brokers that we have working with us. And also offer our brokers the opportunity to own their own premise, so hopefully expand outside of kind of the immediate area. And then 10 years from now, working on the business, not in it essentially, but it won't require your daily input with a self-standing structure. Yeah. So I suppose by expanding upon the market, that's kind of like your journey up to your 10-year point, really, isn't it?
And the first 2 I'm perfectly comfortable with.
Yeah.
Because that's what we've been doing, that's what we can do. I know how to do that.
Yeah.
The part that is difficult is that delegation when you're going to say, right, I'm stepping not out of the business, but other people are going to do the work for the business, and I'm just going to be putting in the direction that the business needs to go. Yeah. That is the hard part, where you're delegating that trust, because no one does it as good as what you do. In your own mind, there are people they do it better than all of us, but it's that moving on and saying, actually, okay, I'm going to trust my people with my clients and step away.
Yeah.
Still be a part of it.
Yeah.
But let them do the work. That's the tricky part.
It is massive, but it is only the only way to actually get to that point. Yeah. I had a point in time where I was like, I can't do my day-to-day job and be the MD or CEO or whatever brand. CEO and MD are quite often the same thing in a small business. And grow the business at the same time. I can't be looking for acquisitions and doing that, but also sending works orders out and handing keys out to contractors. So, and as much as I think I've done an all right job of it, it's not the same. It isn't me doing it. It's not, it doesn't have the same kind of care and attention and that kind of client thing. But they actually have their own, the staff that do it. They're better than me in some ways. But not as good as me in other ways. And you just have to kind of, sooner you accept that's kind of what happens as you transition. It's really hard to keep that culture. We've done loads on like core values, and like we do incentives for the staff. So if they do something that another member of staff's like one of our cores is like, we are accountable or we educate or whatever, and they can recommend each other. So they can be like, such and such taught me how to do something that I didn't quite understand how to do it. So they further educated me, so they put forward, and then they get these points, and then they get like a prize or something. Well, it's like an Amazon
voucher. Perk system?
Yeah, basically. So they have to recommend each other, and then that basically gives them points, and then they get a prize like an Amazon voucher or something like that or whatever. But it encourages them to kind of recommend one another and do that. Through it, the core values is printed in a frame on every one of the offices. Some people have got it as their desk screen as well to remind them to put the points forward. We have a thing every single morning called the huddle, where we go on and we have a Teams call and everybody tells each other what they're doing that day. And that helps with the other bits of the business as well, where people forget them, because we're like primarily a block management company, a lettings department as well with surveying, but they forget about the business outsourcing and the accountancy firm and the rest of it. And so that's quite useful for that. But on the notes that go out from the huddle is the points at the bottom, so it's like an everyday reminder of it's like a league. It's almost like replacing employee of the month, really, I suppose, in your mind, if you're in that league. So that was a really good way of us maintaining the sort of workplace culture. I don't know, if that's of any use to you, or you have something similar.
I think just going back to our point we were talking about a second ago, the hard part that I feel with our industry is that people buy people.
Yeah.
So that is the really tough part. If I meet someone advisor some of my clients I've literally had for 15 years.
Yeah.
To hand those off to.
And you won't get rid of them, honestly. Like, I've got what I call legacy clients.
Yeah,
exactly. And I don't mind dealing with them. I like them, and I've known them for 15 years or so, or managed their building for 15 years. But I manage it in conjunction with the member of staff. So it looks maybe on the outset like I'm the face of it, but really they're doing all the hard work. Send it to me. Yeah. I'm like, I know they wouldn't like it that way. Tinker with that a little bit, and then send it off.
I think that's exactly the way that we'll have to go with ours. When we get to that growth point of other people doing the work and then potentially me being the face of it, is exactly that. I will have the interaction, someone else is doing the work in the background. Yeah.
So what's the kind of, I mean, you're looking at like a timeline. So the first thing is you're going to try and get the financial services and widen the thing, and then look at getting the kind of, more branches or whatever. Is there like a target area that you want to go for in the southeast, or you go a bit like, are you going to try and keep it local to start with? So
I think so. Branch? Lewis would be a good area for us.
Yeah.
In reality, places that have got higher property values, that's going to work better for us.
Yeah.
We are paid based on the size of the loans that we do, so it kind of goes hand in hand with areas that are kind of more affluent in value.
Yeah, and those sort of people probably have a better understanding of pensions and stuff like that. Or you take all your typical kind of Lewis or Brightonian areas, there's a lot of freelance people that perhaps didn't understand their pensions, but they might have good pots of money, or maybe they wake up one day and decide that they want that. And somewhere like Lewis is good because obviously if you base yourself on the south coast, half your customers are in the sea if you do a circle. So at least you're capturing slightly wider area. I suppose on your kind of three biggest challenges, you've got my own perception of what's possible, obviously a fluctuating the economy and the housing market. We talked a bit about the economy and the housing market, but to touch on your kind of perception back to where we were at the beginning, where you kind of like, it's like I'm invincible, and then you suddenly go, how do you think as that grows, that's going to filter into that?
I think it's
because it is hard, isn't it?
I think it's a thing where, as you start getting evidence of, yes, this is working, confidence grows, you can move on. To say baby steps doesn't feel quite right, but I think it's just a case of regularly reviewing.
Yeah.
Looking to see, are we going the right direction? Yes. And then if it's, okay, it's not quite how we expected, I think surrounding yourself with the right people, people that you can reach. I've reached out to you in the past and kind of come up with I'm thinking about doing this, what do you make of it? Kind of lean on other people's experience, and it's accepting you don't know everything that you need to know, and being okay with reaching out to people and saying, this is going on, how would you deal with it? And speaking to a few people and saying, this is going on, how do you see it?
Because I think I was probably a bit like you, like the young 25-year-old Craig or Matthew would not have sought somebody else's experience for an acquisition. You would have just gone hell-bent and done it on your own, wouldn't you?
Yeah, absolutely.
And I know you asked me my thoughts on it or whatever when you were looking at various ones, but like I've learned that as well, like over the years, that like actually you're much better off just taking a breather and just being like, right, I'll just seek some advice for some people and then try and filter that in rather than being a bit gun-ho about it.
Personally, in my historical business and personal life, my mouth sometimes moves faster than my brain. And that's, as you get older, you realise that doesn't benefit you.
No.
Actually, you need to take a moment. The opportunity will still be there tomorrow. Sleep on it.
Yeah. It's that kind of level of acting quick enough that you don't miss out, but not so you make a mistake. And I've learned from that. Like I make the odd mistake now where I'm kind of juggling too many things. So, like for instance, I was doing MD and CEO for a while, so I'm not doing MD anymore. Fading out of that as of next year. So I've promoted someone in the firm to take over MD role, and then I'll just sit as CEO so that I've got less plates spinning all the time, because I wasn't doing either job particularly wholeheartedly, if you like. I can't do this sort of stuff, being a public face of the company and an image, and also deal with the fact that Susan in accounts has, gone off on long-term sick or something, and getting involved with that or whatever. I think definitely, like when you're young, you feel like you're invincible, and then as the journey goes on, you need to surround yourself with that stuff. So you're doing all right with that stuff, but I think a time comes where you have to get that entrepreneurial jazz back in you. And I always set like a safety target. I was like, right, if I know my kids are not going to go hungry or whatever, like I've got enough income, like obviously I went down like working with the council, so I'm heavily reliant upon them. If the council went bust and didn't pay any of the rents, we would probably be out on the street. Was a situation I put myself in, and then I was like, okay, well, what I need to do is bolster myself with all these other sources of income, so I can subsidise that and not that. And you get to a point where if you can keep your like running costs low, then that barrier is like easier to achieve, isn't it?
I think it's a fear that is doesn't reflect reality. And I think it's
like the council going bust. Like,
why
am I worried about? Like the government would probably step in and.
I know that from my business that how much money we've got coming in over the next quarter. I know from the rental how much money I've got coming in. I know my outgoings. Yeah. So you know that it's going to be fine. But it's a part of that fear that keeps you going to find the next thing, to do the next thing. So yeah, we've got a couple of other projects going on next year. But the challenge is always kind of moving that next project on while still maintaining an eye on what you're doing in your day-to-day, your bread and butter.
I think you need to look at getting the business into a position where you can appoint an MD or somebody to run it for you, probably nearer than 10 years.
Yeah.
That's my honest opinion. I think you've got it in you to do that. And it is scary with the risk factor, but I think you put enough of a force field or a moat around your own finances that you don't put that at jeopardy, and then you can go again then, can't you? Because you can go in a really big way then when your mind is focused on things. I strongly think you need to get into a position where you're kind of not involved with the like mortgage applications or whatever. I mean, you can definitely be the public face of the company, going and getting your clients and stuff like that. But recruitment will become like a big issue for you as you grow, and making sure you get the right people. So it's like, as a CEO, your job is literally to spend a lot of your time being like, right, I'm headhunting and talent recruiting all the time. So I know LinkedIn is like a haven for recruitment, but it will keep your recruitment costs down. And I know the mortgage industry is slightly different in terms of like PayWay and self-employed. But getting your personal profile right there and your kind of social presence will be good, because then people will be like, you know, I buy into Craig and what he's done with his business and the rest of it. He's the kind of guy I want to go and work for. So like, we've got this little video on our web. Well, it's not gone live yet, but we'll have a video on our website where you can watch it. And it's only like a minute long, but it's like all the cool things we do here. So like we'll be able to direct people to that video and be like, look, if you know, there's me on LinkedIn and you can see me in my profile, but you can also go watch this video about all the staff testimonials and all that kind of stuff about what it's like working here as well.
Yeah, it's that giving up control of kind of, to some extent, it's my baby. It's like I started it, and it's then entrusting the new kind of people coming in to kind of move that business on. As we were saying earlier, you feel like no one can do it like you can do it. Yeah. But it's actually giving the people the chance to do that, because they will be better at certain things than what I am. Certainly when it comes to marketing. Yeah. I know actually doing the mortgage advice, that's what I'm good at. And it's then going into that next part of saying, actually, I'm going to go and now be good at recruiting people and finding the right, and it's a different type of skill set. Yeah. It's something like trusting yourself as well as new people.
I don't know if you have this or not, but I think it's really good to have a company that you want to be like. Like, I don't know if you have like someone, like a company that you aspire to kind of be like, I want to be like them, like they're of a certain size or style or culture or whatever.
I'd say what's tricky with our industry is you don't have too many really big mortgage brokerages. You kind of have a John Charcoal, who are kind of a more national-based brokerage, but you don't have too many large mortgage brokerages.
Because you're going to be broker as well as pensions provider, so that market, there's some sort of mid-sized ones of those, isn't there?
Yeah, they tend to separate. They tend to become mortgage brokerage and separately pensions and investments. I probably need to do a bit more research. But off the top of my head, there's not too many kind of mid to large size brokerages.
They do tend to get swallowed up a bit, like by your SJPs and all that kind of stuff, as they grow, or they become part of those kind of franchises, don't they? Often when you scratch the surface, but I think there's a space, but definitely it's always good to have that kind of like, I want to, that's where I want to be like that, like. I look often on LinkedIn and I look at other people's marketing, and they're not a business that I like, but I'm like, I want my marketing to be like that. Or like the way their staff are, I want my staff to be like that. I think it's good to have those aspirations.
Yeah, I think you're definitely picking pockets of different companies.
Yeah,
I think that's a great idea.
Yeah, and then just try and roll that into your kind of core values and stuff like that. Yeah. So that will help you grow quite a lot. And then in sense of kind of, I suppose, ring fencing your kind of own life, if you like, I found it really key to like have that kind of frugal-ish lifestyle as much as you can, because you get that lifestyle inflation, you earn more money, so you drive a better car and all that sort of stuff. But as you can rein that in, so then that barrier is lower, isn't it, to achieve like that moat around your own castle, essentially.
Requiring less business to fund your lifestyle.
Yeah, your target is less. So like, a key tip or the medicine for anybody trying to kind of move away. Because when I've moved to this position where I'm only going to be doing the CEO role probably in about 12 months' time as I fade out with the MD stuff, we've modelled the whole business on losing like 50% of our turnover because I'm not driving it all the time. And I'm like, are we going to survive like that? Yeah, like are we going to, like, not 50% of like our business, but like the profit margin is like, say it's like 30%, now it's cut down to 15 because I'm not there driving it all the time because I'm trying to teach somebody else. Can we survive on that? So we've done that as a business model. But as a household, I'm like, as long as the council doesn't go bust, we're kind of all right, because I can afford not to draw any money out of the business for a year.
I think a boat that a lot of people find themselves in is suffering the 1% interest rates. So people built lifestyles when rates were 1%. People had the nice car, the credit card debt, the nice holidays, but they didn't have the expectation of the payment shock. So when rates went from 1.5% to 5%, and all of a sudden, the average mortgage we were finding was going up by like £600-700 a month. And then that shock of, wow, I've built a lifestyle when I could have had the fancy car, the credit card there, the holidays. Well, actually now that becomes unaffordable for many people. So a lot of people I find are suffering from that.
Yeah, I think that is totally correct, because I think there's so many people out there that went, oh well, I'm earning like £500 a month net profit, and they go and buy a £500 a month car, and then the boiler breaks, the interest rate goes up, and then they're suddenly like, well, I can't afford it. And I think that is why the government have gone on this massive drive to get rid of those kind of dinner landlords, as you refer to them, or mum and pop, accidental landlords, whatever phrase people want to use. Big drive to get rid of them, I suppose, and make it more regulated.
They want it to be more professional. So as we know, in a couple of years' time, properties have to be a C rating on an EPC. That's one that is getting a lot of interest at the moment, because when you've got those Victorian flats with the high ceilings, that's probably not going to be able to happen. So there's a lot of attention going around that at the moment. What's going to happen with that? Is it realistic? Because you'll drive more buy-to-let laws out of the market.
Yeah.
And there's not enough. I think Labour said they wanted 1.5 million more houses in the UK over the next, it was 5 years or so, maybe 10. But in reality, the properties that we've already got that are let, that aren't going to be able to make that grade, what's going to happen?
Yeah. I think personally, it's a great opportunity coming for those who are a bit entrepreneurial, because the market is like really low, like the sentiment is of massive enthusiasm. They want to get rid of those buy-to-let landlords who only own one or two, or make it really unprofitable, so they set out the market, make it more professional. Well, but by doing that, they're excluding people and effectively building a moat or a force field around the ability to be like a landlord of some nature. So if you can capitalise on that, I think, in the next few years via acquisitions of businesses that are maybe struggling a bit or want to put out in the market, landlords that are leaving. Our model, we get fed stuff here now from our existing client basis, where they're like, I've had it for 25 years. I'm all right with the fact I'm selling it below market rate anyway, because I've made a load of money, and I'd rather just go on a round the world cruise, to be honest, than make £150 a month and then pay 40% of it to the tax man.
Yeah, it's always the way. It's always the middle class that are the ones that are affected most, particularly with these buy-to-let taxation changes over recent years.
Yeah,
it's the middle class.
Yeah, so I think touching on the acquisitions and stuff as well, I know you've looked at some of those, and I think that it's a good opportunity for anybody that is prepared to weather the storm, to pick up some stuff like, I mean, Warren Buffett always says, like, you know, be fearful when others are, you know, excited about the market, and be excited about the market when everyone else is fearful. So now's probably a good opportunity. So I know you've looked at a few, and we have a chat about that before. I mean, I know you met a few people, didn't you? And stuff.
It come down to that risk, acquiring a new business, because it is such a personal industry. You are buying advice from a person. So you have to kind of expect that if you're buying into a business and those people are walking away, and they're going to walk away fairly soon, that you're going to lose potentially half the custom. And people want a good return on their business. So they're not going to turn around and just give you the business. And quite rightly, they've worked hard to build up their brands and build up a client bank. But it's that actually, how are we going to retain the custom? They've got to go somewhere, but then they start speaking to family and taking recommendations from family as to who they might use. So that's where it's tricky. It's kind of finding a ground that works for both parties when you're trying to acquire the business. Because obviously you want to pay a fair price for it, but the person selling it wants top dollar.
And I think that's where you have to get sort of creative with things as well, with those owners, because most business owners completely value their business like whatever they think it's worth, which is never anywhere near what it's really worth, because you have this rose-tinted glasses on. Oh, it's always going to grow, and it's grown for the last X, Y, Z, and all the customers will stay. They love it.
It's their baby.
They always have that, and it's your kind of job to break that down to them that isn't the case, but in a kind of subtle manner, which is why I'm keen maybe for you to move away from the kind of day-to-day stuff, because those are real slow burners. They take some time to plant seeds with people. I mean, we've got numerous seeds planted with some of our local competitors or people that are looking to pull out the market, or acquisitions for future dates and stuff like that, which every now and then you just go and like sow the seed a little bit more, prod the fire just to keep it alive. And a lot of the time they are totally overvalued, but then it becomes, okay, well, that's your valuation. What is your motive for selling? So is it because you want to get on the cruise, or is it just because you want to, retire in a few years' time and you're kind of toying with the idea, if you like? I mean, we're in advanced discussions with a local letting agent, local to where you are, where they're not ready to retire. Their valuation is a bit sky high, but I'm like, okay, well, as time goes by, perhaps we look at you having 50% of the business or earning something. Like, how can we creatively finance this to get you out of it? And the lettings industry is very much like the mortgage stuff. It's down to the manager and the property, and it's a very family-based. Like there's been the same staff for a long time and stuff, and you might lose some staff as well, so you have to factor all of that in, but creatively trying to work it out with them is...
One thing that I've come across probably in the last more like 5 to 10 years is it's interesting how when your mindset changes and you start looking to do things like acquire business, and you start looking at options there, how other opportunities appear. An element of manifestation, where you're thinking, right, this is what I want to do. And although that opportunity didn't quite work out at the time, a new door opens. We've recently had a new broker join us in our business. That's obviously going to help the business. The acquisition, I don't think it's probably going to work out. It's just not the right terms for both parties. But it's just interesting how your mind is open to something new happening. And then although that didn't happen, the other door opened and we gained a new broker. So it's interesting how just having an open mind brings other opportunities in as well.
Well, I think in terms of sort of the medicine that I would prescribe, I would say definitely try and move away from the kind of day-to-day stuff as you go forward. I think that's going to be key in you growing that business and getting it to that 10-year structure where you've got a really good team of people that believe in the core values. Use the LinkedIn stuff. I know it's all a bit boring, but it's a bit like exercise. You kind of got to do it and do that, and make sure that your kind of profile's there. Turn your job into really being like the leader, the public face of the business and future development of of it. The acquisitions, I do think that there'll be loads of them come up. There'll be lots of people, especially in your industry, where they lose a load of clients when they come around for that renewal. They can't do it. They've been through the financial crash last time around, and it's all a bit kind of, I'm 52 years old and I don't know if I want to do this, or I'm 65 and I want out now. Those are the people that you want to be spending one day a week searching on company's house to go and go, oh, so-and-so mortgage brokers or financial advisors. The guy's 65 years old and he's got 2 members of staff. He's not going to be able to grow his way out of that. Yeah. So he's going to have to look for a seller at some point. Ping them a friendly email. We have 2 types of email here. One is just like a blatant touting email. The other one's like, oh, I have always liked your company. I've aspired to that. I remember when you were this size at this location, and the rest of it. You can use AI to generate that as well. But the one that we're working on at the moment, the local one, I initially used AI to do that. I said all the things I remember about that business, all the stuff I did, bang, tinkered with it a little bit, sent it off. They thanked me for the letter and how nice it was. I remembered all those things.
You bring up AI, that's a big game changer in the mortgage industry, and how the banks are trying to get people to retain their business, and also trying to get new customers through using AI. That will be the future of our business.
Yeah, definitely. We're a big fan of it here. We weren't to start with, and I think people are a little bit dubious about it because all it does is pull the information from the internet. But when I've sat with staff, and that's like my job now, is to be like, right, no one's really using it to its full max. Did you know it can do this? Talk to it like it's your own PA, and then they're like, I didn't realise you could do that. And it's that kind of stuff that I think is really good in workplace culture that you can't do when you're also filling in someone's mortgage application or doing their online thing, because you can't sit with the staff and sort of see what they're doing on a day-to-day basis. Like, I regularly will sit with them and just ask them, is there anything you do here that's really inefficient that irritates you? Oh yeah, there's all of this stuff. Well, why are we doing it that way? I don't understand that. Why have we gone into this? It's that kind of stuff that you can move into when you're not being sort of dragged down by the day-to-day. I don't know, those are sort of my key tips really, I suppose, in a way. Get your business as quickly as you can to a point where you can kind of concentrate on the growth. I wouldn't worry so much about the protecting your moat. If you've done the figures, you have to believe in them. If you can't believe in them, then who believes in them? Like, you've got to believe in yourself, haven't you? That's why you sign personal guarantees and all the rest of it, because you know that it's going to work. You believe in your figures. So you can go too far the other way, I think, and that's the danger of some people.
I don't think we, or I personally, have gone too far the other way. Is, like I mentioned earlier, once your family structure changes, that's when you're not that invincible person. But the
also your kids will get older as well, and then you'll be less worried about it as well. I mean, my kids are older than yours, so I do remember that time of thinking like, what if? And actually, weirdly for me, it wasn't about that. It was when I used to do BMXing, and I went into work one day and I could only type with one hand because I'd smashed my shoulder up, and I just thought, I need to stop doing this.
I think for me, it's the balance. It's that I want to spend as much time as I can with the kids growing up. Where I worked at the corporate brokerage before, although it wasn't a great work-life balance, they did install a strong work ethic in you. So it's that guilt sometimes when you're out of the office and you're doing things with the family which you're loving, but you've got that kind of half a mind's eye on actually, oh no, I need to be doing that. I've got to chase that up. This needs doing. So it's a personal battle. I know that the business is going well. We've been in the business 8 years, and that's going to continue for probably long beyond my reign of running the business.
And you achieve longevity. Like, most businesses don't get past 10 years. So like, when you get to that goal, you're actually like a small percentage of businesses.
90% in year one, 80% in year two.
Yeah, it's really big fallout rate. Like, to get to 10 years is actually really underrated as like an achievement, I think, in the world. But I mean, you ask Hayley when we leave here, she's my PA, and she literally nags me to death to like spend time with the kids, or like not do stuff when I'm out, or like, like we have a WhatsApp group and I'll be like, oh, I'm off today, anyone need me, WhatsApp me, and she's straight in there like, don't WhatsApp Matt, WhatsApp me if you need me. Oh, WhatsApp Matt. It is hard, but you will move away from it and you'll get that kind of balance right. Like,
we've got the next part of the growth lined up. We're looking at the moment to move offices, and that's going to give us a bit more presence on the high street. Definitely, at the moment our office is fine for the number of people we've got, but the new one should give us ability to carry on growing.
Yeah, it's in a slightly better location, isn't it? So, yeah, so I think those are some key tips. Work on the marketing stuff as you go through to that CEO role, because you are like your own brand in a sense.
Yeah,
you know, that's why I
do
all this
find
stuff.
that part quite. It's quite a British thing, isn't it?
Yeah.
Of not wanting to oversell yourself.
Yeah.
For people to go, oh, crikey, all right.
Yeah.
It's a hard balance.
It is a hard balance, and I did worry about that to start with, and it is a British thing for sure. I mean, Danny is obviously American, and there's a bit of me that's like, I quite like the enthusiasm of that, because it reminds me that you don't have to be so British all the time about everything. First few times we walked through our old offices with the camera, I felt really embarrassed. I was talking along and she's filming me, and I'm like, everyone's looking at me like I'm some sort of influencer or something and quite embarrassing. But as time's gone by, I've got better at it. I'm still not the one for standing on my own doing it. Like when she asked me to film something on my phone of my day in the life or something, I get a bit kind of shy about that.
Yeah, those people that can do that, I think fantastic.
Yeah.
Because it's not something that sits comfy. But the more you do it, I suppose, the better you get at it.
The better you get at it, and also I think people buy people. What they'll do is they'll be like, I'm dealing with John at Venture Morgatge, but I feel I'm sort of still dealing with Craig, because I follow him and I see what he's doing today.
Still have a presence.
And they feel like a connection to you in that way, even though they may never have met you. Like, we're starting now to get people coming here for not podcast related stuff, but like actual business, like block management or lettings or whatever, and they've watched the videos and they've liked the videos. They might run their own business and they like the tips or whatever, and they want to have a look around the podcast studio as well. It's nosy, interesting stuff. So all of that builds like a brand in its own right, doesn't it?
Yeah, absolutely.
Yeah. Okay. I don't know if you had any questions specifically for me whilst you're here at all, or
I suppose the big thing that I was thinking on the way here was about your scale, because you've scaled fairly quickly. You've done it with property, and you've also done it with your businesses. Yeah. So my main thing was, how did you manage to scale? How did you do it in the speed that you done it?
Well, if you look on the back of my head here, it's slightly less hair here. So
you sold your hair?
Yeah, I sold my hair extensions. That's how you do it. No. I'm not going to lie, it's been pretty full on the last probably few years since we came out of COVID. Anybody that knows me well, we've grown pretty rapidly since then. We were a team of, we were 5 and we went into COVID and I let someone go, so there was 4 of us. Yeah. And recently I think we totted just around about 35 people. Yeah. I think it reminded me of the days of when I was at my old partnership, where acquisition was actually a really good way of growing the business. So I was like, okay, well, we've got this money, I can put it into the buy-to-let stuff, but obviously the buy-to-let stuff can sometimes give like pretty minimal returns, especially with the new interest rates and the rest of it. I mean, I kind of anticipated after COVID there'd be some inflation, so that might have affected things. So I did a lot, 2021, I did some of that through yourself. And then I kind of took a little bit of a breather on it. But what happened was that some acquisitions came across the table, and I remembered or realised that actually often you don't really need the money to fund these things if you can then like kind of capitalise.
Future earnings.
Yeah, so I creatively funded an awful lot of stuff with people, which is some of it's come to the end of. I mean, like Stone and Block Management, which was one we purchased. Karen was just burnt out by a job. She's a typical business owner, started out on her own in the pandemic, just shortly after, and working long hours, almost earning minimum wage, and it's quite a hard job. And she was just like, I kind of just want to work for someone now. And I'm like, well, I need staff. You're a good member. You've got qualifications. And she was like, well, how about I'll give you the portfolio, but I want a job.
Okay.
Well,
yeah.
Tick both boxes. So that's like acquisition number 1 done. The other one, they shared the same accountant that I did, so they put us in touch. That made me think to myself, accountants, they're really exposed to people wanting to exit, and it's like that, like your accountant's like your best mate almost, isn't he? Like everyone, like the typical business owner's like really in love with their accountant. They tell them everything, don't they?
Well, the numbers are there, aren't they?
Yeah, and they don't understand them. So I thought, what if I could build an accountancy business that would expose me to a lot more acquisitions and things like that of various companies. They've got to fit with the synergy of the business that we're doing here. So we went down that route as well. So we have awesome accountants that Sharon runs. And that exposes us to various things as time goes by, and she builds that business. And networking as well. So many people. I go obviously I do the BNI not as much as I did before, but loads of business owners where they start up in the pandemic or whatever. Now they've had enough of it, so exiting the market or looking for various other things. So the We Group stuff with Laura, she got offered a job, and then she was like, I want to carry on with the We Group, but I kind of want to do this job, and then she ended up working here and stuff. And I'm always thinking about how can I kind of take what's being presented to me and kind of make it into the existing system as long as it fits. So accountancy is brilliant. Business outsourcing is bookkeeping and admin services basically, and a bit of recruitment, and then you've got the existing property portfolio as well and the business.
So it sounds like just again being open-minded to opportunities.
Yeah, because they fit with the existing structure. I wouldn't buy a coffee shop, for instance, because I don't know how you make coffee. Not that people make it for me. I mean, I don't know how you make it out of a funky machine. Yeah. But I don't understand that industry. I think being open-minded and don't just stick it to one thing if it's got synergies.
Yes, I think that's a big part.
If you get to a point where you're spending, say, I don't know, a salary on something per year, think about bringing it in-house. Like marketing, for instance. Or if you're spending so much with a supplier, think about how could I actually maybe be that supplier. So we outsourced some of our bookkeeping, and then I ended up buying an outsourcing bookkeeping company because we got to a point where I was like, actually, that's a good move for us. So,
thank you.
Yeah. All right.
Sorry.
So I don't know if you had any other questions about the growth. Obviously, people can have a look at our website. There's even a timeline there now because I thought that was a nice little thing to do.
Very nice.
of what we've got on, what we've had, and we've got future things in the pipeline that I can't talk about too much. But but I think like just being excited about it and trying to figure out a way of going, how can I get that to work for me? You'll get to a point where there's so many opportunities, you can pick and choose the ones that are the best.
No, it's brilliant. Thank you very much. Thanks for having me today.
No worries at all.
Cheers,
well, maybe come on in a year's time, see where you're at.
Give you an update.
Yeah, definitely.